Now, the e-commerce giant Jumia reported a 14% decline in revenue, which came in at $36.5 million in the third quarter of this year, driven by currency depreciation in major markets like Nigeria and Egypt. Meanwhile, the company witnessed a 6% increase in the number of orders, reflecting continued user interest and engagement. Francis Dufay, Group CEO of Jumia, joins me for this discussion. Francis, thank you for taking the time out to join us. Let's get right to it. I know that Jumia made a number of adjustments. You took some decisions to reposition the business, which, according to a statement that you put out, negatively impacted the business. I'd like you to briefly speak to some of those readjustments that were made in the business.
Thanks, Esther. Yes, as you mentioned, it's a quarter of mixed results like revenue, but it's been a quarter of very hard work, right? It's closing a phase at Jumia of about 2 years. We've been restructuring quite heavily the business. We did a lot this quarter again. For example, we started so we organized our supply chain and logistics. We've consolidated fulfillment centers in our 4 biggest markets. So all that is definitely creating, disruption to day-to-day operations, but it's putting us in a much better position for 2025.
Right, and part of that, those major improvements, you call them, was also shutting your South Africa and Tunisia business. Talk to us about why you took that decision. Talk to us about the kind of sales that were coming from those 2 markets and how the business will be better going forward without those 2 markets.
Yes, of course. So it's never an easy decision, right? I mean, we have teams in those 2 countries who've been fighting very hard in difficult conditions. It was not a light decision, but in the end, it's the right thing to do for the company so we can focus our resources on bigger markets with better trends. Those 2 markets accounted for 2% of orders, 3% of sales volumes. So it's something we can catch up quite fast in other markets. It's really not impacting our long-term prospects as a company, but it's making it easier and more simple for us to manage the business and to deliver growth in other locations. For example, this quarter, we announced that we had really nice usage growth in Nigeria in smaller cities outside of Abuja and Lagos. Typically, we're happy to focus more resources, allocate more time to Nigerian operations, and the growth perspectives are excellent in the country.
Part of the weakness for the business is the currency issue, the currency depreciation. Talk to us about the scale of this, what you're doing to get around this. A number of businesses also in Nigeria are still exposed to the FX issue, but talk to us about how this is impacting your business and what the strategy is to perhaps hedge, if that's what you're doing.
Well, we're not hedging, that's not our business, but definitely depreciations have an impact for us because it's disrupting the market. And also, for like any company reporting in US dollars, it's impacting our top line figures, right? So you mentioned that revenue was down. It's massively driven by the devaluation last year. Earlier in first quarter in both Egypt and Nigeria. The market impact we're seeing is that, well, it makes supply more difficult. It makes consumers a bit more price conscious, but we've really adapted our business model so we're able to deal with those consequences. We have now a product assortment that's really tailored for the middle class with limited purchasing power. We've really secured a lot of supply from our importers. So actually, in the end, we're very much able to operate in that environment. So we don't see it as a weakness going forward.
Speaking about customers, for the numbers, there was a marginal increase in quarterly active customer base, which grew, I believe, 1% year on year, and the orders were also up 4%. Although, gross merchandise value for the quarter came in at down 1% year on year, but up 29% in constant currency. Talk to us about, the GVM going forward. You made all these changes. What kind of numbers are you expecting, or can we expect going forward?
Yeah, so we have not guided precisely, but you see this quarter that we are back to growth, moderate amounts of growth, but it's not spectacular, it's not double digits yet, but there's a consistent trend of improving numbers on the usage side. So finally, we're growing the user base, our orders on e-commerce are growing 5 points. Now it's the time for us to accelerate. We've disclosed some positive numbers, like in Nigeria. We believe we can deliver a lot more. This quarter, we served 2 million consumers across Africa. We can and we have to do a lot more than that. And I believe that over the past 2 years, we've built the right business to serve a lot more people and in a profitable way.
Right.
So I'm quite optimistic about, end of 24 and the coming year.
Right. I mean, while the Nigerian market is a huge market, no doubt, for your customer base, I mean, you know what the numbers are, especially from an inflation point of view. It's been a difficult time for even the middle class, which I know that you target. But talk to us about how the market is changing for you, how you're adapting to spending habits of Nigerians who are perhaps becoming a little more conservative owing to the inflationary environment.
Look, I know it's been a tough couple of years for Nigeria, but I'm personally very optimistic about our business in Nigeria. I know it's a bit unconventional in the current environment, but Nigeria for us is over 200 million consumers, potential consumers. E-commerce is still relatively small, and there's so much we can do. We have really adapted our business model so we can cater for the needs of the middle class, of people who don't have a lot of money, people earning like $100 to $200, maybe $300 a month. That's a lot of people in Nigeria. We have the right products. We have very cheap and expensive delivery options. We've been expanding to new cities to reach people wherever they live, not just focusing on Lagos and a couple of big cities. So we've really changed our strategy. So our product offering, our service is a lot more relevant for the people, even in the context of depreciation and difficult macroeconomics like we saw in Nigeria. For example, last year, our fastest growing country was Ghana, in spite of about 50% in inflation. So we're really able to grow e-commerce. We can really address the needs of the middle class in spite of difficult macroeconomics.
Right.
That's what we're doing, and that's why I'm confident for our business in Nigeria.
All right, we'll leave it there. Thank you so much, Francis, for talking to us today. And of course, we wish you all the best with the strategy. Francis Dufay, Group CEO of Jumia.